Thanks for stopping by, everyone. My name is Jeff, and I have not been this excited to make a video in quite a while, guys. So this is the portfolio I manage here for the channel. And as some of you may already know, this portfolio is completely funded by a portion of the ad revenue I make here on the channel. So a while back, I thought this would be a good idea. You know, ads play on my videos, and I get a check for that every month. And so I devote a portion of that money to building a portfolio for everybody here on YouTube to watch. And I'm fully transparent with this. Like I said, I see a lot of other channels doing it. I always like to tune in and watch that kind of stuff. I think it is a whole lot of fun to see some of the stuff other people are interested in, stocks other people are interested in. And guys, this has been more of a high growth portfolio. And guys, I've taken 5 new positions and we're going to cover that tonight. And what I wanted to do, guys, is I wanted to get some strength and value. I wanted to diversify out a bit. Also wanted to get some strength and dividends, and we certainly accomplished that. And January has been a fantastic month. Like I said, right over here, guys, you can see, so the portfolio value is sitting at a 2.47% total return right now, and up $9.54. All right, so up here on top, guys, Google Class A, still our number 1 position. We're sitting at about a 6% gain right now. That one is performing real well. Google will be reporting earnings on Monday. So depending on what kind of price action we get there, I may be adding to it, or we might see this stock burst and get some more growth. So it just depends on what kind of numbers Google reports on Monday. Then our second position, which is Amazon, guys, it is down about 1%. Of course, they had a really good earnings report, but the stock did not react the way we all kind of anticipated it to. And now I thought about buying some more Amazon today, but I actually said I'm going to wait it out, because buying in at a 1% loss is not really going to benefit your cost basis much. So I just decided let's just kind of wait off on that. I'm pretty happy with the price we got on Amazon. Take-Two Interactive Software, like I said, I've been building that position up here and there over the month, anticipating the earnings call that they have coming. And Take-Two is going to report earnings on the 6th of February, so it's just a couple days away, and I am looking forward to that. Now, if they miss, I'm going to keep building it. I am expecting a pretty strong beat with some serious forward guidance, but like I said, the nature of the market right now is very unpredictable, so if they do take a step back, I'm going to be buying some more. Apple is down about 9%, guys. I'm real proud of this position. I was going to add to Apple on the last big dip, but I said I wanted to wait till after earnings to see what happened, and Apple actually started to recover, take a pretty nice gain after earnings. So I ended up not buying more Apple, okay? I'm actually pretty content with my 9% loss. Like I said, at one time in December, this position was down about 28%, and now we're only down about 9%. All right, the spider, the S&P 500, up 9%, guys. That one is performing really well. JP Morgan Chase is down about 3.3%. Of course, the banks did kind of get hit a little bit this week. Now, ticker symbol MJ, okay, guys, this is the Alternative Harvest Marijuana ETF. We are up 22% on this position. It has been performing well all week and all month. I think it's my best performing position in the portfolio. Over the past 30 days, MJ has just been on fire. Like I said, so has Kronos and Aurora, Canopy Growth. Several of the marijuana stocks are absolutely on fire right now. That one is performing great. Very, very happy with that one. The NASDAQ Invesco Trust, we're up about 8% right now. And then DIA, that's the Dow Jones Industrial Average Spider, up about 7% on that. Really, really happy with that position. All right, guys, now let's kind of breeze through these right here real quick, and then I'll get to my 5 newest positions. So the PPA, Aerospace and Defense, up about 3%, looking real good there. USD, we're up about 12.68%. Very happy, very pleased with that. MasterCard, we're up 11%. Alibaba is up 17%. I think that's my second best position in the portfolio right now. Disney is, like I said, that one is kind of lagging. It is not trading up against the market like I anticipated it to. But this is a long-term position, guys. And just keep in mind, we're really anticipating that streaming package package that they're going to be putting out this year. And then Tesla. Tesla is my worst performing stock right now, okay? Down about 18%. You know, they actually beat on revenue on their earnings report, but they had a miss on EPS, and there's been some negative news coming out for Tesla. You know, I was down about 27% on this one, and it's actually recovered a little bit, and I probably will be buying more this upcoming week at some time. All right, now here is the 5 new positions, guys. Like I mentioned at the start of the video, this is a very high growth portfolio. You know, very aggressive, very tech heavy, very MJ heavy. So like I said, high risk, high growth, and this right here, I think this balances the charts just a little bit. You know, I think I've really got some value in this portfolio, and I definitely got some strength in dividends, okay? So right here, guys, Altria Group, ticker symbol MO. Of course, anybody that watches my channel knows how great my interest has been in Altria Group lately, guys. We are up 10% on this position. So they hit that 52-week low. You know, of course, I made that video last week. I got my M1 Finance portfolio and took a small position, and it is up 10%. So the second new position I took this month, guys, was Nucor Corporation, okay? Now, this is an American steel maker. It's probably one of the only few videos on this chart that I have not made a video for, but the reason I bought this stock, guys, is because I have a very strong feeling that when the United States and China announce their new trade agreement, I have a very strong feeling that American steel stocks are really gonna boom, okay? Then right down here, guys, NRZ again. You know, anybody that tunes in and watches the channel, you know, I've pretty much talked about NRZ and Altria Group endlessly over the past couple of weeks, and how excited I am not only to get in this stock for the growth, but the massive dividend payment, okay? So I think the yield on the position I took was still well over 12%, and like I said, we're up 4% on this position right now. So very, very excited and happy about that investment. And guys, that gives us some diversity into real estate. All right, I also took a position in Coca-Cola, okay? It was wavering right there at that $47 level, was not recovering like the rest of the market was. It has performed very well, up 3.6%. Like I said, Coca-Cola is going to diversify us into the soft drink industry, and that is a true Warren Buffett type investment, a true value play. And so I'm really excited to own Coca-Cola. And now this last one, guys, Verizon Wireless. This is my favorite method of playing the telecoms. Of course, I am a Verizon Wireless investor. I'm a Verizon Wireless customer. I've been a Verizon Wireless investor for many years now. You know, one of my favorite stocks, and I wanted to find a way to get it into this portfolio, but I did not want to buy into those highs. So, you know, Verizon did have a small miss on earnings the other day, and the stock pulled back to around $53. And again, the same day that I bought the position of Coca-Cola, I decided to take a small position in Verizon, and it is even performing well, up 2.7%. Because keep in mind, now as Verizon has dropped in price a little bit, that dividend yield starts going up. Same with Altria Group, and same with Coca-Cola, okay? So that's the 5 new positions, guys, and I'm real excited about it. And so this is our actual statistics here, guys. We have 20 holdings in the portfolio. Our dividend yield is just a little over 1%. Like I said, I think bringing some of those new positions in have bumped that up a little bit. And then our expense ratio is 0.12%, okay? So I do want that dividend yield to come up a little bit, but I also want to keep that heavy growth aspect, okay? But anyways, guys, that's all I've got for today's video. Drop me a comment. Tell me some companies that you're interested in. Tell me some companies you think maybe I should have on my radar, and maybe I should be trying to look at to maybe pick up a position in. Actually, today on the earnings miss, I was thinking about adding Sony to this portfolio, and I also thought about adding Microsoft on their earnings miss. But the only reason I didn't do that is because I own so many shares of Microsoft in my Robinhood portfolio anyway. As always, thanks for watching. Drop a like on this video, guys, and have an awesome day.